while it has been a flat day for the Indian currency there, the interest rate futures have seen a launch today coming in from MCX-SX. Remember, the SEBI had allowed IRF futures in December 2013. It's going to be 10-year government bonds. Serial monthly contracts would be available and maximum maturity of 3 months is where you can trade. It is expected to benefit the banks, brokerages, insurance companies and primary dealers as well. While the MCX-SX has launched the contract today and has seen nearly 700 crores of volumes done today itself. Tomorrow is NSE, well, it would be launching the interest rate futures, and BSE, of course, would launch the same product on 28th of Jan. Let's get on board then. Mr. A.V. Rajwade, he's Director, A.V. Rajwade and Company, and he joins us live on the show. Mr. Rajwade, hi. First of all, what's your sense on the interest rate futures, and do you think this time around the exchanges and the regulators have found the product mix proper?
I think it is certainly better than the earlier ones. The way I look at it is that earlier two efforts, I mean, they were really stillbirths. The markets never took off. They were launched with great publicity. One hopes that this time, I think the product specifications are much better. But I think the key issue also is that so long as banks hold a huge amount of their investments in the HTM or held to maturity category, and I think a very large amount of investments in government securities, particularly by the public sector banks, are kept in the held to maturity category. Now, once you keep them in the HTM category, then you're not too much worried about whether the price goes up or down. So I think if they are really keen, there is an overdue sort of reform in terms of trying to reduce the HTM held to maturity category limits, which the RBI has allowed to bank. Also, our definitions of held to maturity seem extremely liberal as compared to what, for instance, the accounting standards specify. So I think it's a better product. Whether it will have liquidity, I think, remains to be seen because of this one factor which I mentioned.
Vijay, I would want your comment on the same as well. I mean, it's interest rate futures is back into the markets. The 3% is what you have to pay as an initial margin there. What's your sense with 700 crores of volumes done today, and NSE also would be coming into market tomorrow? How are you looking at participation?
Manish, I remain extremely optimistic and hopeful that this time around the IRF futures trading finds favor with all genres of market participants, because any financial market setup is like a 747 aircraft. It has 4 engines. One is the equity market, the other is the commodity markets, the third is the forex market, and the fourth is a bond market. So far in the Indian context, we did not have anything called a bond market to speak about for the retail and institutional investor, which was vibrant, which had depth, which had turnover, and affordability for the retail investor, where a very low entry barrier by way of span margins was concerned. So now that the markets are getting a fourth engine, that is the IRF window, I'm very hopeful that at least the savvy investors will take the lead in participating in this market, because it's a very exciting, very profitable market for the skilled investor. And I would be all in favor of taking the plunge tomorrow when the NSE offers this product. I would be very surprised in the coming few months if the turnover on this segment on the NSE not cross 10,000 crores per day.
All right, so that's the amount we are looking for, 10,000 crores on the futures there. Well, let's talk about some currencies as well. And Jim, getting you in the conversation, a lot of traders are calling the year 2014 as the year of US dollar. What are your readings or reactions to that?
Well, I own the US dollar, so I hope they're right. It worries me that you say that that's getting to be a consensus. I like to be on the other side of the consensus. My view is that we're going to have more currency turmoil in the world, more turmoil in many things, and during periods like that, many people flee to the US dollar. They think it's a safe haven. It is not a safe haven, but many people think it is. That's why I own it, because I expect more turmoil. Eventually, whether it's this year or next or whenever, when everybody has flocked to the US dollar, that's the time to sell it and get out. Who knows where I'm going to go then?
Mr. Jware, what's your sense really? How would you start this year off? With the dollar as a dollar friend or as a rupee friend? How would you want to trade it?
Well, between dollar rupee, I certainly prefer dollar. I think the rupee is still significantly overvalued in purchasing power parity terms. There has been a drop in the current account and trade deficits, but I think the primary reason is a reduction in gold imports. Also, I think that has been accompanied, as I have been apprehending for quite some time, by a sharp increase in smuggled gold. Ultimately, whether smuggled or officially imported, gold is paid for in dollars in any case, and that too by the residents who are ultimately buyers. So I think this will get reflected in terms of the NRE remittances, in terms of the other remittances which come into the country, particularly from the Gulf area. So I think it remains overvalued in my view. I think there are some hopes that the current account deficit may come down a little, but I think if you have seen the last few months' figures, the export growth has come down, and I think there was also a very significant base effect, because the previous year the export numbers were quite low. So I think I'm not very bullish, and I think despite the huge inflation differential, RBI keeping it steady by one means or another, I'm not too sure that that's a policy I would advocate. But yes, in the near term, I think stability likely, but we have too many uncertainties. First, of course, there are political uncertainties. We will have the elections in a few months' time, and I think it's very, very difficult to call what kind of, or rather, which government will be in place and what kind of macroeconomic policies they would adopt. So I think a lot of uncertainties. Fiscal deficit, I think one way or another, perhaps by recourse to some creative accounting, some postponement of expenditure, cut in capital expenditure, I think the finance minister will manage to keep it within the number to which he is committed. Whether that's the wisest policy in terms of future growth, I have question marks.